before, please do so again. And at the end of the talk, we'll have time for questions and answers. So we're very excited to have Archambeau with us today, co-founder and chairman of Quadia, a Geneva-based investment management company established in 2010 and dedicated to impact investing. Eric is also the father of a junior here at the college. He serves as the global chairman of the Jamie Oliver Food Foundation. He is also the chair of the investment committee of London-based Nosto Impact Fund, Europe's largest social impact fund. Eric is a founding board member of SoilHeritage.org, a nonprofit organization which analyzes and publishes financial data from farms to promote widespread investment in regenerative agriculture projects. He also serves on the board of SumAll.org, a nonprofit organization dedicated to doing social good by analyzing data. Eric has been involved in early-stage venture capital investing in Europe over the past decade and has led to a number of successful early-stage investment companies in Europe. Prior to becoming an investor, Eric was a successful entrepreneur in Silicon Valley for over 20 years. As co-founder and CEO of several software and internet companies, most notably RightPoint Software and Trading Dynamics, as well as founding board member of eGroups. In 2003, Eric co-founded Social Impact International, a nonprofit organization that runs programs combining mentoring with skills training, access to capacity building, and funding for social entrepreneurs. With that, please join me in welcoming Eric Archambeau.
Sorry in advance for the terrible French accent. I've never been able to shake it, so it's part of my trademark. It's really California, so I didn't keep it. I mean, I keep it. So it's always a pleasure to have young people. It's easier and easier for me to say young people because I'm getting older, so I'm getting younger. But to see a lot more interest in the field of social entrepreneurship and impact investing. 10, 12 years ago, I gave a few talks at INSEAD, and the first time there was only a couple of people that showed up. In large part because the field was not very well known, and the concept was almost seen as an oxymoron. Why would you invest in something that was not going to give you returns? That was really the view and that people had just 10 years ago. And I think we've come a very long way in that field in explaining what we can do as investors by not making any compromises in between having financial returns that are sustainable and not making compromises between financial returns and social and environmental impact. And that's what I would like to show you today are real life examples and real life achievements on that particular philosophy of not making compromises between the two. So one venture that we started now 5 years ago in Geneva, Switzerland, based on my prior work on the social and environmental entrepreneurship area, is Quadia. So Quadia is not a fund. It's very important to see the difference. So we are not raising a pool of money from investors blindly ahead of time and tell them we're going to invest in a lot of companies. But we design for a number of high net worth individuals, including ourselves. We put money to work into individual projects. And so we're going to do mostly private equity investments. That was the beginning. But we're moving more and more into public investments. So we find companies that are suitable for impact investing that are publicly listed. I'll get to that in a moment, because that's very, very important. That's the only way to really scale this. And we also go into a number of debt investing, and then we do agriculture, land type of investing with regenerative agriculture. And that's a very fast-growing field, which is very interesting. So we started small, because by definition, since we don't have funds predefined, we put money to work over time. And so we started small, and it's actually accelerating. So last year, we probably put to work 30% of that 100 million in the past 12 months. And this year, it looks like we're going to be putting even more money to play. So although we are tiny in the world of investment, our growth is actually really rapid, and we think we could be a significant player in the next 5 years or so. And what is also very interesting is that we don't do any active client recruiting. People come to us, which is also very interesting because some of the, at least in Europe, some of the wealthiest families are really, really interested now by getting into the field. So that could have a more global impact on the other players in the private equity and public equity world by having their own clients tell them, look, we want you to pay attention to this particular topic. So I'm very optimistic on the growth of the field of impact investing for the next few years. So just since I'm in a higher level education place, I wanted to add a theory on things. I'm not going to spend time on that, but really when we are looking for an investment target, the way we look at it, we're really looking at a number of things in the company. But the first point, intentionality, the intention of the entrepreneurs and the CEO is very important. So we are not necessarily bound by the current state of the enterprise and the company. We are much more interested by the journey. We are much more interested by the development that the company, the trajectory of the company, and the impact that our investment is going to have on the KPIs that we will measure. So the company could start with a very low impact, either because of its size, which is the way you can look at it from a startup company, but even if it's a larger company that had, I would say, neutral habits at a certain point, but discovered that they could have a larger impact by changing their trajectory, and they are raising money for that, we might be very interested by participating in their journey, because we think that there will be more impacts through that than anything else. Actually, when we are looking at these companies, more and more, we are finding that the concept of working with the enemy might be a much more impactful concept than working only with companies that are being 100% impactful from the start. And there are limits and everything, but I think it's very important to look at that. So, for example, we are looking at investing in a company that is in the peer-to-peer financial lending on the internet, and in Europe, they are the leader in that field. The founders of that company have been very restricted by their current and initial investors and what they can do in terms of social impact. They actually started the company when they started the company a while ago. They were INSEAD students, started the company. I was around at that time when they came to see me, and their vision was really to change the world through lending, a different way of looking at lending. And as you know, you have this idea of credit scoring. So if you have good credit, you can borrow money. If you don't have good credit, then you cannot borrow money. And if you don't have good credit, you never borrow money. Therefore, you never have good credit. So that's the conundrum that many families or individuals are in. And the vision of those guys who started this company, which has become very successful in a very different way, it was, yeah, let's start with a bit more social justice, looking at, because we have the technology now to make it happen. And of course, the investors initially told them, well, we are not interested by that. Why don't you forget about that aspect? It's not very interesting. We're not going to make money out of that, but why don't you just focus on people who are better credit and who make more money? So they grew, they got to a certain point, and that today they feel much more comfortable with coming out with their idea and say, why don't we go and reach out to a larger population that we have not reached out, that no one has reached out to, where we can have a real impact on social impact. And so we are very interested in finding a way to invest in this company at that stage, where the company is already fairly large, not public yet, and we could have an influence on making this company much more socially impactful than they would be otherwise. That's an example of an investment where you can come in at a time where the entrepreneurs has already been identified as a very successful entrepreneur, the organization has a certain scale, and if you can impact the processes, DNA, culture of the company, you can have a lot of impact. And it's, it may not be a very pure way of looking at impact investing, but we feel that it can be extremely impactful to do so. So that's the type of things we are looking at these days. So this is stuff that you know, so I'll pass. I just wanted to have 1 second on that slide because it kind of situates how we operate and the type of companies we invest in before I talk about the companies. And we're already in the middle. So we are already here. We are not making any compromise on the financial returns or competitive financial returns. But we are not just doing the CSR thing, looking at the least bad approach to social and environmental impact. We are really looking for companies and teams, and it's really about culture at the end of the day. Whether the culture of the company has aligned its the mission, the social and environmental mission of its founders with its own processes. It's relatively easy to check. You listen to the founders and they tell you a few things, and then you go talk to a number of employees at the edge of the company, and you ask them about how they conduct their business. If they are in the purchasing department and they have no clue of how they should look at the suppliers, and if they are on the selling side and they have no clue on what the mission of the company is, then you don't have alignment between the two things. And it's very important. So that's what we do. So we're in the middle of that thing. So we're not social investors in the pure sense of the thing, but we are not CSR supporters either. We are looking for companies who have abandoned CSR and made the social and environmental impact as part of the core mission of the company and incorporated that in the culture of the company. So I have a slide on the market potential, but I think the thing that is really important to recognize is that we are tiny. Impact investing is still tiny. So usually in the class you have two types of people. There are those guys who are the half empty and the other ones who are the half full glasses. So the half empty people say, well, geez, I'm not going to work there because the opportunity is much here. And the half full guys say, great, it's fantastic, I have a lot of things to go. So you can look at it in different ways. I obviously look at it from it's fantastic, I can go 100 times my market before I get saturated. So, the work we started really with Quadia a couple of years ago, before we made any single investment, we recognized that there was one impediment for success in impact investing, and it's impact measurement. And especially in 2009, 2010, when we looked at the market, there was no really good really good tools or companies that were doing impact measurements. So we actually set out to do that first. So our first investment was to recruit a few people and try to put together a process and tools to help us measure the impact on different investments. So we have done that. Still not perfect and still not great. And that's, again, another idea or suggestion for some of you who are analytically minded. There is a big opportunity there to build something which will be accepted by social and impact investors around the measurement of impact over time. So how do you measure where a company starts from on different dimensions and follow them through? To reassure you, before the great crisis of the 1920s or 1930s, the financial crisis, there was no really commonly accepted accounting principles in the world. You could put anything you want in the report, and that's why you have these big crises, because people would hide a lot of things in their accounting, and people were cheating, people were talking about something in one way and another way. It took this big depression, a big crisis in Wall Street in 1929 to push people to do something which was commonly accepted. So we are pre-1929 in social investment and impact investing. I hope we don't need that type of crisis to get there, but until we have a commonly accepted way of looking at impact investing and measuring impact investment, that's going to be a big impediment for both. We have talked to some really large institutional investors, and the main reason why they are not really active in the sector is because they have a hard time reporting on whether they'll be successful and more successful, less successful, because of this impact. So we did embark into a way of looking at things. So we have I showed it to you, actually my presentation is poorly designed, I should have first how it looks, but we are basically looking at several dimensions. And then we have to make some kind of simplifications, linear simplification for multi-dimensional model with one number. If anyone has better suggestions, please come to me at the end. But so the optimal efficiency for a company is to get to 1, and you can start at 5 or more. And as you go down over time, we track the progress of the company. So this over time, hopefully we see our companies go from, wherever we invest, that's 3 or 4, and progressively move to 1 in terms of the impact. That's the idea, is to track the impact over time. And our job is not to find, at least that's the way we view it, and we have a debate on that, but our job is not necessarily to invest in the perfect, impactful company. Our job as early stage investors mostly is to invest in companies that are on the way to become impactful and help them with our money and some of our advice to become much more impactful. So that's the way we look at our return from an impact point. And we think that by doing so, we don't need to make a compromise on the financials, at least over time. Might be that for a brief period of time, the same way that you may have to invest more in R&D to become more competitive from a product point of view. You may have to invest in some processes to make your company more impactful, but over time you'll be financially better off. So that's what we have been investing in. So quite a lot in clean energy, actually, because we have one big company we have invested in. We found the company when it just got spun off from a utility company in Switzerland. It's called KKB. Fantastic name, no one knows what it means. And KKB is the clean energy supplier of several utilities in Switzerland. When we looked at it, it was really more like a holding company with a bunch of disparate companies, not much of a culture, not much of a management, and we have been doing that, and they have grown a lot. And so, what they do is they invest in assets in clean energy. So an asset might be a micro dam, that creates hydroelectricity, or it might be a small farm of a solar farm, or it might be a small wind farm. But what the company does, which is impactful, is they actually conduct a lot of surveys and studies on how to make these assets much more environmentally friendly. So that's the thing around regeneration of the ecosystem around it. So they buy, for example, they buy a private dam, which has been poorly managed and poorly managed over time, and they will make sure that a big chunk of what they do is to regenerate the environment around, and also care about the social impact of the asset around the population, and maybe employ some people to do things well. So we are measuring the impact that this company has over time, and we have been able to channel quite a lot of money to the company, and right now we are just in the midst of raising over 50 million Swiss francs for the company for its next phase of investment. So very exciting. And we're just getting into sustainable food and regenerative agriculture. So by next year we should have a lot of big investments there. And we are obviously involved in Europe, but we have projects that touch a lot of different countries. I'm a big proponent of really trying to look much more into, and you notice the big desert here in terms of investments. We have not touched even the US or Canada, two small countries. But I'm a big proponent of being very active in the developed world as opposed to just look at the developing world. So I think that's a very undeserved territory. I mean, as you can see, we have not invested in the US. I think there's so much to be done in our own backyards to be much more impactful in the social and environmental point. So here's an example of how we report on sustainability and our impact. So there's the usual stuff that the warning about the company, what we do, and then that's the actual analysis is pretty intense. So we have 3 people working full time on this impact measurements, and that's the type of thing we produce at the end. So we are looking at the impact, return, and risk, so the financial return, the risk associated with returning the impact over time, and the current state of the social and environmental impact. And behind each dimension, you have another multi-dimensional cube, and so at the end you actually have this final note, final writing. And we didn't find anything easier to do. When you look at financial returns, it's very easy. You get the EBITDA at the end. It's one line, and it's a computation of things which are very easy. This one is much more difficult to do. So I thought this would be more interesting and for everyone than what I talked about before, which is like the framework of what we do. So I picked a couple of examples of companies that we have invested in or are involved in. So I chose one which is interesting in the food area. It's called PACA. Apologies for the small group that was with me before, as much because we talked about PACA already. But PACA is a really interesting company. It's a Swiss company, so it's run by Swiss guys in Zurich who were working in the big food industry before, and they got a bit, let's say, disenchanted by the way the big food industry worked. So they thought there was a big trend starting a few years ago around the consumption of nuts, the food. And they were looking at and the way people are, this big trend everyone wants to eat almonds and pecan nuts and these type of things at breakfast, and make sure you have enough of that because it's good for your health. Now, it's good for your health, not necessarily for the health of the growers in the different countries. It just happened that most nuts need to be grown in tropical areas where you have mostly developing countries. And if you leave it to the big industry, the way they look at it is, scale is better, margins are better for us, not for the other guys, and therefore they push a lot of things down to the farmers there. Basically, the small farmers disappear; they cannot sustain the demand, so you get these big fields, intensive agriculture, they destroy the soil, and people don't get paid very much. So they work harder than before, and they don't get much out of it. So the nut boom is not great for everyone. So what PACA has decided to do is to be an efficient link between supply and demand, and so they work upstream with the retail industry. So mostly they only work in Europe for the time being. So they work in Switzerland, in Germany, in France, in the Nordics, and they go see the big retail chain and say, how about you're interested by healthy products? How about the type of product we can deliver to you? And it can be a transformed product. It could be chocolate-covered almonds. Easy to do because in Switzerland there's lots of chocolate. So we can do this type of thing. And then we're going to go, PACA is going to go and see producers in different areas in the world, depending on the type of nuts, and they're going to work with them to help them develop practice in the best practices possible in organic agriculture, sustainable farming, and also teach people and help them with financing also to develop the capacity to transform the product because they get better margins. So the margins developed by the suppliers is not just about the raw foods, but it's also about the transformed foods. You may have to roast them on the side, you may have to do a number of transformations. And so it's really a bi-directional system because the more sustainable these farmers are, the suppliers are, the better they are, the better PACA is successful in growing its own business with the trade. So for example, if you ever take a Swiss or Lufthansa in business class or first class, you're very likely to be served the PACA nuts because Lufthansa and Swiss have decided to use them exclusively on their flights, which is a big win for them. Which in turn, actually, we need to do a better job on that because they were supposed to train also the stewards and stewardess to tell you what it was, so there will be an impact. We don't do a super job. I'll just try that in my way. And I have to teach so that's what I do. I just write and go see the thing and say, look, you guys are saying that, you should say that, and stuff. They look at me like, who is this guy? And we do that. So the type of, but the stories that we have are really good. And I'm not a big, I'm not a big believer that the story makes everything, but you need to use the story to make your marketing. For example, I was telling earlier, the almonds are coming from Palestine, from a joint Palestinian-Israeli group that is growing the almonds in these very tense areas where almond trees don't have to worry too much about bullets because they are trees, but they grow in these areas where you cannot do anything else because the trees are trees. They are not like crops. It's easier to maintain. And but they come from there. And that's one of the few sources of income and jobs for the Palestinians in these very difficult areas. And it's funded in part by the Israeli guys who want peace to happen. So we promote that as part of what we do. We get our cashew nuts from Kerala in India, where we have trained the farmers on organic farming. Before that, they were working on some industrialized processes also. So it's a really interesting company. I would encourage you next time you go to Europe to buy their products. You can get them in most supermarket chains now. We, as Quadia, we have done a lot of work in reaching out to people we know in the big companies and to get them to pay attention and to work with them. So that's what we are doing a bunch of different things. And the way we are looking at impact, so we're looking at impact per unit, and then we prioritize, we put all these things together, and that puts the global impact of Baghdad together. So another one which I thought would be fun to talk about is Jamie Oliver. So Jamie, I joined his board a while ago. After some I was in the board of his foundation. Now I'm the chairman of the foundation, which showed up when I started to talk to him because he gave me a lot of work now. But I was very impressed by his TED talk 5 years ago. I was at TED, and I went to see him, and I said, "Geez, it's really interesting. You seem to be passionate and really genuine about all these issues about food and nutrition and so on." And said, "Yeah." I said, "So, and you're applying the same concept to your restaurants, of course." So he paused, and okay. So a few months later, I was talking to him in London, and say, "I've been really puzzled by what you said. It's very interesting because, yeah, we have a foundation, we do all the things, but at the same time, we don't pay a lot of attention to that." And I checked, and we don't pay any attention to any of the things that I'm talking about in our group. So don't say anything to anyone, but maybe we could do something about it. That was 5 years ago, 4 years ago. And so we have been embarking into a big project around that. I'm pleased to say that now today, the group is totally 100% aligned on between the vision and mission of the founder and its own act. So we don't, at the end of the day, the foundation has become a laboratory for more things than actually something that is at the core of it's really at the core of the business. So to give you an idea of the impact that Jamie has as a food activist, it's quite amazing. But he actually the latest number I have on books, but it goes very fast. It's 37 million. We just sold 2 million books from the last time I put this slide together, which was a few months ago. That's probably 20 times more than the second person who sold books, as much books. It's quite amazing. What is also really interesting is the number of people that have downloaded the Jamie Oliver apps, which are recipe apps. So there are 12 million people, and we get a great song. Think about it. If suddenly in every single recipe there is as part of that, you have the idea that, hey, you can actually cook from scratch, and everything you can get from, all the ingredients could be something that comes from a farmer's market or from something which is sustainable. So if you could actually trace that electronically over time, it's a vision, we're getting there. Every time you open a recipe and you say, hey, okay, I want to do the Jamie's chicken today. Where is my lemon going to come from? And where is my thyme going to come from? Where is my oil going to come from? If I can link that to the suppliers and check the suppliers and filter the suppliers based on the number of social and environmental impact criteria, that would have a huge impact. And that's what really attracted me to the opportunity here. And that's what I've been working on for the last couple of years. The other thing is we started a couple of years ago, everything is a couple of years ago, but a couple of years ago, seriously, we did start this Food Revolution Day, which is a 1 day of awareness that we are, and this is it's in a few days this year, it's on May 15, where we pick a theme, something that we think is worth talking about with a big loudspeaker, and we push on that. So this year, we are, because of the conjunction of the Milano Fair and some talks from the governments about food education, we have decided to launch a big petition for people to demand from their own governments in all the different countries in the world that food education is put into the curriculum of the primary schools. It is something that, as a foundation, we obtained last year from the UK government. So for those of you who might be having family in the UK, starting this fall, food education will be part of the official curriculum in the UK. So every single kid will be learning that a tomato is actually a living plant that looks, it's red and it's actually looking this way. Because as you may know, at least in the Western world, we have totally lost connection with what we eat. And many kids don't even know what a fruit or vegetable look like. So we have a program that goes into, that we have designed, that goes into schools. We already have reached 1,000 schools in the UK this year with the program to know your vegetables and understand where the food comes from and these type of things. And that's a big one. So we are launching that petition this year. We have done the pre-launch, and we have already had 900,000 signatures, so that's the pre-launch. And we are looking forward to a big push on that. And next year we're still deciding on what we need. But every year, the reach we have is growing. And last year we had 1.4 billion tweet impressions on Twitter in one day, which was the largest ever single burst on Twitter, which is quite amazing. So it means billion impressions mean that between tweets and retweets, how many people, how many messages got to different, so you may have done 3, or you may have done 1 or 0, but then overall there was 1.4 million tweets that were really impressions that were produced. It doesn't mean everyone got active on that, unfortunately. There was quite a few. So we are very bullish about our capacity to do things, and we are very open to partner with people who have great ideas, great causes that are linked to nutrition and food education, who are basically a huge loudspeaker. We can broadcast things to more people than anyone can. So we are very willing to work with people. So within the group, I wanted to mention that because we have our activity outside, but we have to be very coherent inside. We need to make sure our values are totally aligned with what we preach to the outside. So one thing we have done, for example, in the restaurant group. So restaurant group has a little bit over 80 restaurants, and as I mentioned before, globally we serve around 7 million meals. I mean, not meals, around 7 million people come to our restaurants per year. So it's really interesting, and we have we have this. We have hired a couple of people. There's one guy that is in charge of that. He's the director of the. I don't remember what his new title is, but basically he's in charge of putting all these standards and this manifesto inside the company, and then he's the guy that preaches internally about the values of the company. And initially, a few people were a bit skeptical, but I tell you that today it is part of the integral part of the culture of the company. And I was reviewing in the plane, and they sent me this huge thing with every single department has the objectives and for the year and so on. And every single department has, as part of their objectives, they have put a number of sustainability and objectives and so on. And it's it came from the bottom up. Really interesting. So we have we really look at animal welfare. We look at sustainability of the suppliers, the way they use additives, the way they use all kind of things in the fields, and the database. I think today we are at close to 12,000 food items that are being part of the system, and we update that permanently. We do some audits, and we want to make sure that if you're looking at, so when you go into the reports, you can drill down into every single type of thing. So if you look for olive oil coming from Italy, you're going to be looking at the suppliers. If suppliers are not, if there is any type of uncertainty on the way they grow the olives or the way they are harvesting, the way they are paying the people that work for them, we're going to, ask questions or send some kind of auditor, and if we are not satisfied, we're going to cross them entirely from the suppliers. So that's so what is really interesting is that we have that here. Yeah, we have. Yeah, as you mentioned, yeah, that's important also. As part of the group, we have one activity which sells, it's like Martha Stewart, or Paul Newman's own salad dressing, I think. So we have an activity of selling products. So you can buy Jamie's salt. I don't, but some people do buy the salt, so you have Jamie on it, and we think it's better salt as well. But at least we, on all these products, you have you know where it comes from. So it used to not mean anything, so you just have this picture on it. But now, today, thanks to that, you actually have the insurance that the products are sustainably sourced. There is an impact. The only, so what I like to say to Jamie is that now his group has become impact investigator. So when and if we look at new equity investors, if we go public or maybe before we go public, we can become a B Corp. B Corps have just started to arrive in Europe. Actually, the first B Corp status was awarded 2 weeks ago in Europe. There was no B Corp before. And so, Jamie's group qualifies. It's a multi-hundred million pound. It's a private company, so in Europe, we don't necessarily publish the revenues and profitability, but it's a profitable multi-hundred million pound company that is an impact company, and it's really at the core of so the only thing that we need to do, and now we're embarking into that phase, is measuring the impact we're creating every year. And that's the next phase of that work. Okay, so I've been told that I should shut up now and ask for questions. Anyone else?
You were talking about the measured impact over time. I was wondering what some of the criteria you use currently and what you see as some of the, in the future, the model that potentially will be able to track impact over time. What do you see as some of the criteria in that model?
So, of course, there are like super duper experts here. So I have to be careful. What constitutes impact? So if you go back to, for example, what constitutes profitability when you look at profit and loss statements in finance, which I'm sure all of you are very familiar with, thanks to recent classes. So it's really interesting because when you look at, let's assume you have a multi-product company that we all got. Okay? So you may have like three different lines of products, and every time you produce the different products, you have a gross margin that itself is composed of multiple elements. And so let's assume you're building chairs, and some of the elements might have a little bit more margins, or maybe even a loss. But since you wanted to have that particular shape, you're happy to have a loss on one part of the chair, because the rest is going to provide some margins. And then you're going to have another one which is smaller line of product, it's growing very fast, and it's high margin, the market's getting. What I'm getting to is that measuring impact in the company is the it is actually the synthesis of many small pieces that you are looking at. And so it makes the life of the impact measurer very difficult, because you need to add up all these different things. And they are not necessarily, as when you look at the gross margin, it's about cents and dollars, whereas in impact, they are not always in the same, it's very difficult to put them in the same unit of work. You know? So am I going to get a more impact, let's take Paca, you know, if I'm growing nuts in Ghana, am I going to get a higher impact here on some aspects of the environment at the expense of less on the social side? And which one is more important? I mean, there are lots of things around the fact that impact is, and even in the environment, you know, what am I going to look at? You know, maybe water supply, maybe water supply doesn't matter when you're in Ghana. Am I looking at CO2? Am I looking at, you know, how long and how far it is to bring the nuts to my destination? Am I going to be on board? Am I going to be on the plane? So all these type of things are very difficult to measure. And as I said before, there needs to be a lot more common database where I could actually benchmark myself, as opposed to just, you know, surprising things which in absolute look good or bad, but might be relatively much better or much worse than other people. And I think that's the type of thing we need to put in place. That's all. It's a very good answer to a simple question.
Can I add a quick follow-up? I was just wondering how might that impact, like a company's impact quotient translate to investors? If a company has high impact growth, how is that just a feel-good statement for feel-good sentiment for investors that they've invested in something that's high impact quickly, or is that actually translate to some improvements in their returns? Or
yeah, that's a very, very good question. You know, why? It goes back to why should I care about investing in impact in my company? Why should I care at all at the end of the day? So I think impact investors have to set themselves some goals in terms of what they want to achieve. You know, do I want to achieve? Do I want all my financial returns to be attached to a positive impact on the environment, for example? Because I care about the future of my own investors. So that's actually, I'm saying that because a pension fund in Switzerland came to us not long ago. And they said, which is very encouraging, but we have not had yet the perfect product for them, so hopefully this year we'll be able to do something with them. But they came to us and they said, look, we, as a pension fund, we have, they call that pensionnaires, you know? So we have pensionnaires that are making money, but they also care about, you know, the world they're going to leave once they stop being pensionnaires, when they die. And we want to make sure that the money we invest in the pension fund not only continues to bring returns until the end to these pensionnaires, but that when they leave the planet, the environment is going to be better than when we started to, you know, to be retired. That's a very interesting concept, and I don't know whether that's going to be led and followed by other people. But in that case, with that type of guidance, then you can build you can really build a program that looks at every single investment and say, yeah, you know, do I want a 5% return on my investment with no care about the environment, or do I want 4 to 6%? Maybe I'm going to be better. But at the same time, I want to make sure that I have a positive impact on chart, growing impact of that particular investment on the environment. And then you can really measure, because then you have an easier path to measure.
You mentioned sort of public companies that could be potential investments for impact. Can you talk a little bit about how you understanding the impact of public companies? I mean, all of us in this room, if we want to invest in companies, normally they have to be public. Can you talk a little bit about that?
Sure. So one company and one, so I'm going two leads on that. one there is a company called Sonnen Capital in San Francisco, you want to look at, SONEN, and it was initially funded by friends Charlie Gleisner, but I've done a lot of things in India with it, we did social impact together. And Sonnen is basically channeling money into mutual funds in the US, and they work closely with this, when they have enough money, you need enough money to be able to knock on the door and say, I'd like to talk to you, because if you show up with 100,000 euros, they're not going to, or even $1 million, they're not going to listen to you. But if you show up with 100 million or 500 million, people start listening. So even the big guys, PIMCO and so on, then they open the door and they say, well, if you want 100 million, then we'd like to have this type of analysis on this type of companies. And so then PIMCO goes back to the companies, and PIMCO then, when they talk to you as a CFO, you listen to them because they represent hundreds of billions, and they say, well, we have a group of investors who really care about impact, and here's a questionnaire, and here's the thing that they would like to track. And they think that you might be qualified for that, but we need your help in order to do that. So the answer to your question is, there's no way you can measure the impact, the real impact of a company, without a real deep, bi-directional discussion with the company itself. Just, I don't believe that you can guess, or the guess is going to be so, the range of the answer is going to be so wide. You cannot just guess from the outside, just based on financial reports and so on. You really need to get into it. So what we have done on our side, so we haven't used that approach, in part because we don't have the 500 million to go see the people in Europe. But what we have done, we have zeroed in on a bunch of smaller companies, or small caps. That's why I mentioned at some point there was a public company around these small caps, because they are smaller. So when we show up with 20, 50 million, they listen to us. And so we have 3 companies we are working with, 2 that we have invested in. One is this, actually the Swiss utility company is publicly traded. So we are activist investors. So we joined the board. So one of my former partners in venture capital, who has turned into a environmentalist activist, is on the board of the company, and he pushes the company, the management, and he basically talks to the other investors and says, this is what you want to do, this is why, and so on, and we support it. And the other company is an interesting French company that is in the travel industry, and they do, when I say travel, they organize bespoke tours, for people. And they are very much into making sure that there's no impact actually there's only positive impact from people who go there. So if you go, I'm not going to Nepal, it will be a bit more complex, but if you go to Bhutan, and Bhutan's too easy now. So you go to India, and you want to have a tour in Kerala or Rajasthan, they're going to organize the tour in such a way that, of course, you don't leave anything behind you, so you don't throw paper all over the place, which actually does exist. That you will actually have some kind of interaction with the local people, that you will be looking at local trade, local manufacturers of things, and actually have a form of positive social and environmental impact during your trip. And then you're going to do kind of offsetting and these type of things. It's very interesting. We have engaged with them. I'm clearly not the guy who's following the business. I don't know enough about it, but I know that we have channeled money into it through pipes, private investment in public equity. It's a form of fundraising for public companies. You can do a reserve placement that is offered to the public, but that has some characteristics, and those characteristics are linked to impact. So there was a premiere in Europe, well, we actually did this impact pipe, if you want to call it. So, and it worked very well. So and so the management is very welcoming because they want to, the founders and the managers, the CEO, really would like to try to have his entire investor base constituted 100% of impact investors, if you could. So we are becoming a channel for impact investors to go into public companies.
I wanted to ask you a question to follow up our discussion before the talk. We work with students here and sort of introducing them into the concept of social entrepreneurship through activities and opportunities, but also social impact. And it's very interesting to see you shedding light on different opportunities that are involving. What are some of the, how do you see the market going now by the time that these students from Middlebury will be graduating? What should be the outlook into the field of social impact investment?
They are graduating in 2 months. It's going to be a short one. Well, I think it really depends what they're interested in. You know, I had a brief discussion with. So some of the students are interested in policy making. Some students are interested in finance. Some students are more entrepreneurs themselves. It's very difficult to give one thing, but the advice I would say is that, and again, based on my experience in the past over 20 years now being really involved in entrepreneurship in general and venture capital and private equity, is that even 7 years ago, I remember discussing with some entrepreneurs, if you wanted to be a successful entrepreneur and attract financing, you had to hide the fact that you had, you cared about social and environmental impact. You really had to hide it, like the guys from Zopa and also more. So today it's okay. I mean, I think I would encourage you to start a company or join a company looking with your eyes open about the social and environmental impact that this company, either your company or the company you are joining, is having. And be totally open about talking about it. And you're not going to be seen as a freak if you talk about it. So I think I think what is very important is that, to me, that every single person graduating in the next few years from all the colleges in Europe and the US and elsewhere, talk about it and say, this is important for my life. If I'm an entrepreneur, I don't want to be having some sacrifice on the impact side just for the appearance of being more profitable. I don't think I want, as part of my core values, to really care about that. So there will be a number of things that we do and we will not do, and I will not compromise it. And I tell you that today, we will find a lot of resonance from investors. People like Union Square Ventures in New York, probably 7-8 years ago, couldn't care less about that. And today, maybe Etsy, the IPO of Etsy, and then whatever, but I'm closing a deal with these guys in Europe right now. It's a 100% impact company. It's profitable, but as part of the core values of the company are social and environmental impact. Really at the core of the company. It's a pure impact company. And they do care about that today. And they think it's a great way to make money because you're going to hire better people, you're going to get a better PR, everything is going for you today. So my advice is don't hide the fact that it's there.
We have time for one more question, I'd say.
You talked a little bit about sort of working with the enemy, and I was just wondering about how you go about changing a company and their culture and realigning their vision with their practices and how you manage the cost of that.
Right. Yeah, so it's not easy. And so with the January Foundation, we did that with Unilever, a lot of people, and with the Hellmann's mayonnaise. Right. And they came to us, and so first I see it. And then they said, look, you know, we've heard what you're doing and so on, and we'd like to make our mayonnaise better. And so the best thing would be not to eat mayonnaise, so you should. I said, yeah, but if you want to make it better, we have an idea. You talked about the egg, the way, because you know, Jenny had done a piece on British television about the horrible way that chicken were being raised in this, this thing. And that shocked the country. And they, just after that, they came and said, look, we'd like to do something. We were ready to promise to go to 100% free-range chicken for eggs if you accept to work with us on that and make the world know that. So it was a little bit of an amendment. We accepted to do that. And that had by itself, they were one of the largest consumers of eggs in the UK. That had a huge impact. Today, I don't think you can find a how do you call that, industrial chicken facility at all in the UK. Finished, done. Because in large part because of that move. So we thought, working with the enemy in that particular case would achieve a huge environmental and social impact because people who are working there, I would not have loved to have that job.
All right, well, thank you so much, Eric, for coming and speaking today, and thank you for everyone who attended. I think this was a great talk to end our semester spring speaker series on, and I hope you all enjoyed the variety of speakers we had over the course of the semester. And we will resume the speaker series again in the fall. So thank you again, Eric, for coming.